Let's bring in Kevin Hincks, co-host of Fast Market here on Schwab Network. We're starting to get some of the news trickling in. I mean, first and foremost, the bond move is pretty big. Right at the top, before the show started, I wrote 4.32%, and now it's at 4.29%. So that's first and foremost the first thing that people will definitely be watching. What are you watching?
Here's why that is, Nicole. The Fed slows the Treasury runoff, or QT, to $5 billion per month. So a slowing in the quantitative tightening is why bonds are moving. I think that's why you're seeing the market reaction as well. Though they didn't move on rates, that is a dovish move by the Fed. Christopher Waller dissented on the QT decision. I see a fair amount of changes in some of the wording, like you mentioned, but right now, at least for now, the headline is no change, and the headline is slowing the quantitative tightening to $5 billion per month.
And we're seeing that they're going to be attentive to the risks on both sides of the mandate. The mandate, really, the Fed's mandate is really to have inflation and also full labor. And so these are the two things that they're watching to keep labor intact and not have high inflation. They have seen the CPI, PPI. There were some components that folks said maybe the PCE could come in a little hotter on the next round. And that may be the reason why definitely no one was saying a cut today.
Well, exactly right. They didn't guide to it. The Fed funds futures didn't show it. The question is, when is the next one coming? It'll all be about the dot plots and how they see the economy going forward. Here's what we want to know from Jerome Powell and the Fed. How many and when are they starting, right? If they're going to start lowering interest rates, is it going to be June? Is it going to be 3? There's the question. Right now it's set at 2, and it was later in the year, as you know. But the Fed funds futures have moved much closer to that June meeting. The percentage is getting high. So that's what the answers that we're going to see. We're going to learn about, obviously, the dot plots, the GDP, inflation, and unemployment expectations. We'll see what those come in the dot plots. Are they going to mention tariffs? They did mention uncertainty around some things, some uncertainty around the economic outlook. That's some of the red lines that they put in the statement. And then, again, we want to know the number of rate cuts. And then they answered one question already. The QT of the balance sheet cut to $5 billion a month. There's your first dovish indication by the Fed. Nicole?
Yeah, what's interesting here is, Andrew Brenner, when I was speaking with him in Nat Alliance, he thought that the Fed was going to play somewhat of a hawkish tone today and not sort of allude to more cuts to come and we're ready to cut and sort of give up the card and play it close to the vest and not say we're doing 2 or 3 cuts this year. He, in fact, thinks 2 or 3 cuts is what we're going to get. That's what he thought. So, right now, the market reaction is different than, if they were going to say, hey, we're not doing any cuts. But it looks like they are on the middle of this because they said uncertainty has increased. They did raise the core inflation outlook to 2.8% for 2025. That doesn't say cut at all. As I just wanted to peek and see if we're still at 4.29%. Any final thoughts here?
Yeah, they raised 2026 from 2% to 2.2%. So slightly higher levels of inflation. Remember, this is a snapshot, Nicole, of right now what they think. And so some of the inflation was running hotter based on the consumer sentiment. Is that what's creeping into these numbers? Because the hard data, wages, GDP, CPI, PPI were all lower than expected. Maybe they think the rate of inflation, because of the potential for tariffs, the rate of inflation will slow. Because that's why they're raising those numbers for 2025 to 2.8, 2026 to 2.2. So we'll see how that plays out over time. But like I said, and Jerome Powell will reiterate this, the dot plot is a snapshot of right now, Nicole.
Yeah, and the economy expanding at a solid pace. To your point, 2.8 on inflation for this year, 2.2 next year, 2% in 2027. And you know what's interesting, Kevin, I'll leave you with this final thought. I know you got to get back to work there at the CBOE. The risk, remember that statement, risks are roughly in balance. They took that statement out. So the uncertainty around the economic outlook has increased, so they cannot no longer say that statement. All right, Kevin Hincks, great stuff. Thank you so much. Wonderful to see you there at the CBOE.